Right, welcome to part two, geezer. Part two, we're going to explore what options we have as public in UK. The banks have come under scrutiny for causing the credit crunch, and I think that's a very fair comment. What was happening? It's called the ninja mortgages in America. No income, no jobs or assets, and basically the investment institutions and banks was lending money via mortgages to people who just come out of prison, no jobs, and then they were selling it on as toxic debt to banks, and banks were buying it, and people made a killing, but it all went horribly wrong. But anyway, if we look at ISAs, this is Santander's Easy ISA. It actually shows you the interest rates on here, which are they're beyond a joke. Um, Most they go up to is 0.5%, and unless you've got £27,000 in there, you're only going to earn 0.1%. If you think about inflation, that goes along around what 2% on average a year. So you're losing your money's losing value being in an ISA. You're not losing money, but the money you've got is losing value because inflation is higher than what they're paying you. You're doing the banks a huge favour by having your money in an ISA, because what they can do is they can pay you peanuts, and then they can lend it out via mortgages and loans to other people, and charge them a lot more for it. You're doing the banks a favour because the banks would not do this for you. The banks wouldn't give you this money, um, ask for peanuts back, and then say, "Oh, you can lend it out to who you want for 7%," which is what Santander are doing. Um, they're lending out your money that's in the ISA for 7%. I mean, this is from 7%, so it starts at 7%. 7%, dependent on how long you take the loan out for. It may go up to sort of 15%. That's my money. If I've got my money in an ISA, that's my money that they're lending out. They're paying me 0.1%. So you're doing the banks a huge, huge favour having your money in an ISA. If everyone pulled their money out of an ISA of the banks overnight, the banks would go under because they would not be able to cope. They need your money for cash flow. We don't recommend ISAs. We recommend trading, and this is why. This is the latest trade that I made. I'm the main We Make Mints analysis at the moment. We made just over 5 grand on one trade. Now, it would probably take me a lifetime of interest in an ISA to earn this sort of money. So, I mean, this is just, we've made more money on trades before. We didn't keep it as evidence like we have with this because we didn't know we was going to do We Make Mints. It was only when we decided to make WeMakeMints.com we thought, actually, we better start documenting what profits we're making so people can actually see we know what we're talking about. But if you want to trade, if you've got money in an ISA and you want to trade, don't do it yet. Come to us. We will teach you everything that you need to know and maybe more. And you can start doing this. We've done it, so no reason you can't. Look at this orange juice call. The orange juice, this is called a bull flag. I'd expect it to hit around 130 odd. That's what I would imagine on this orange juice trade. But we'll see how it goes. It may change. So we'll be nimble with that one. That call was on our CFD tutorial. Let's just have a little look what happened just after. I think it's literally the day after we made that call. We made it around here. We bought in at 1 to 1.65. Um, Orange juice actually went just literally above 130. It pretty much done it in the space of 3 days after we made that video. Now with orange juice, it probably make a high. But anyway, with orange juice, every one it goes up. So say you buy at 122, at 123, you've made £100. So every dollar it goes up, that is £100. So if we only had one contract, so at 130, you're making quite a bit of money. This is what we want to recommend for our members. We will teach you how to do this yourself. Eventually, you won't need our recommendations. You will know how to do this yourself, and you'll be making trades like this. So, in summary, what are we going to do? Do we want to do what this man wants us to do? Um, don't forget that the government actually own part of the banks. That was what all the bailout was for. whenever you hear banking bailout, it's basically government giving banks money for shares. Basically, they inject money into the banks to keep them going. So of course the government, the UK government, own part of the banks, so they want you to have your money into ISAs, so the banks can make money out of your money. We don't really want to do that. We want to use our brain. We've got a head on our shoulders, so why don't we use it instead of conforming and following everyone else like sheep? Um, let's give it a go. Let's give trading a go. We gave it a go. We're doing very well. We're reading charts now, like we never could before. These sort of charts, we can trade them, make money out of them, and we can teach you how to do this. If you don't know anything about charts, this is going to look very, very foreign and complex to you. But we will teach you what this means. After a lesson or two, you'll be able to draw these yourself. Our members get sent charts like this on a very regular basis. Whenever we're analysing charts, then we send them to our members. You're going to pick things up all the time from us, and you will be able to read these charts yourself and be able to make your own profits from them. So I think that's a bit better than putting your money in an ISA and letting the banks make the money. So thank you for your time, and I hope you've learned something today. Come on to wemakemints.com.